Welcome to Build a Basic Budget. We have a five-step spending plan presented by Alaska Air Group Credit Union. Seminar objectives will be: know how to set up a spending plan, identify spending leaks, track spending, save money, set financial goals, audit progress, revise goals, use financial tools. Many of you may be doing some of these things, but most people haven't mastered all of them. The goal of this seminar is to give you the tools to plan and manage your spending effectively. Remember, establishing a plan before a financial crisis will put you in a better position to weather both major and minor setbacks, such as loss of job, medical emergency, or unexpected repair bills. Benefits of managing money: free up time, do things you enjoy, less stress, better health, achieve goals, satisfaction, greater control, peace of mind. These are many of the benefits of managing your money. Think about some of the more difficult times in your life. How did your financial situation affect that situation? Did it make it more stressful? What about the periods of time in which you felt like life was going well? How well were you in control of your finances at that time? While money is not everything, the sense of financial control definitely gives you peace of mind and a positive outlook. Now is the time to take a quick 1-minute quiz. You can find a link below to access the PDF for this quiz. Once upon completing this quiz, ask yourself, did you find areas in your financial life that need improvement? So please pause this video and take that quiz. Thank you. Now that you've completed the quick quiz, ask yourself, do you spend more than you make? Do you live beyond your means? Spend uncontrollably? Neglect emergency savings? Charge instead of saving up? Or pay yourself last? Because you want to pay yourself first. Pay yourself first means deciding on a certain percentage or dollar amount of savings to be taken out of your paycheck before you spend it on something else. Some people wait until the end of the paycheck to determine if there's anything left over and apply that to savings, but that's paying yourself last, which means you probably won't be saving nearly enough to reach your financial goals. When building a budget, it's very important to consider the term SMART. SMART financial goals, which stands for specific, measurable, adjustable, realistic, and time-oriented. To gain control of your finances, it's important to set these specific financial goals. But what does that mean? So for example, if you simply say, I need to pay off my credit card debt, you're less likely to reach your goal than if you use the SMART method and say, I will pay off my credit card debt of $1,200 within 12 months by taking, for example, lunch to work instead of eating out, or drinking a regular coffee versus an expensive latte daily. This is an example of a specific goal that is also measurable, adjustable, realistic, and time-oriented. Once you set your SMART financial goals, now break them down into short, medium, and long-term timeframes. Your short-term timeframes may be different from someone else's short-term timeframe. You decide on the length of these 3 timeframes, but use the ones on the slide as a guide or a starting point. Please pause the video now and go to the link below to My SMART Financial Goals and fill out at least one goal and be as specific as possible. It's important to know the difference between a budget, saving, and investing. For this seminar, we focus primarily on short-term, which is establishing a budget or a spending plan. There are 2 key components to day-to-day personal finances. Those 2 things are income and expenses. It's important to note that a spending plan is a simple, straightforward tool. Many people don't take the time to write down their plan for how they're going to spend their income. With no plan, money often seems to fly out the window. A spending plan or budget helps you do several things. A budget is a roadmap that helps you figure out whether you're going in the direction you want to go financially. It helps you make informed choices about where your money goes, leading to a more enriched life. It tells you whether you're living within your means, that is, whether your income exceeds expenses. It helps you meet your savings goals and prepare for emergencies. Without a roadmap for managing your money, you lose control, you have more stress, and are less likely to achieve your goals. With a roadmap, you control your financial future. As you begin using your plan, be flexible. Make adjustments as you go along. It could take several attempts to determine the categories and amounts that work for your particular situation. The 5 steps to a successful spending plan are listed here, which are: number 1, list monthly income sources and expenses. 2, determine where your money goes. 3, balance income and expenses. 4, review and communicate. 5, manage your system. Now, let's look at each step in more detail. The first step is to list all your monthly income sources and expenses. To help you develop your own budget categories, there are many apps available and programs on the internet. No matter what application you use, tailor it to your specific budget categories. When listing out monthly expenses, there could be 3 different types of expenses: fixed, flexible, and periodic. Fixed could be like a car payment or a mortgage loan payment that's paid monthly. Flexible could be food, clothing, utilities. Periodic could be taxes or insurance. You also can think of expenses in terms of these 4 categories: necessary, which may include basic needs, shelter, food, utilities, insurance, medical, taxes, loan payments. Discretionary could include things that aren't necessary for survival, such as vacations, entertainment, special clothing. Personal could be paying yourself first. Miscellaneous could be those unplanned expenses. Remember that a general miscellaneous category in your budget should not be a catch-all, because that would make it difficult to track exactly where your money goes. But if you use the miscellaneous category for unplanned expenses, you should also plan for the unexpected and build in a reserve for when the refrigerator dies, the car needs repairs, and so on. If miscellaneous expenses are more than 10% of your income, you may need to do a better job of tracking expenses. If you don't use all the money allocated in miscellaneous, use the excess to pay off debt and to build savings. Methods to track spending can be using your online banking, the mobile app, computer programs such as Quicken, or your checkbook ledger, or the receipts method. Keep in mind that if you use the receipts method, it's always good to keep 3 months worth of receipts, group them by category, divide by 3, and that's your average monthly expenditure on that category. The envelope method, where you could write down categories on the envelopes and place receipts in them, and allocate cash into each envelope. Please note that keeping cash out could be a risk. And you have the account book method. A great tool for tracking spending and budgeting is Money Desktop. This is a tool that Alaska Air Group Credit Union has partnered with Money Desktop. Please go on to online banking or the mobile app to check this tool out and begin your budgeting. Once you start tracking your expenses, you'll figure out where your money is really going. Then you can identify your spending leaks. In particular, I'd recommend looking at a lot of your small purchases, such as soda, fast food, coffee, downloading apps, and so on. Those things can really add up, and you can see how much you're spending on those smaller items. However you track your budget, make sure you communicate. Meet regularly. Don't wait for problems to occur. Allow all members of the family to participate in the discussion. All of us, including children, are more satisfied with decisions we helped make. Clearly identify the problem. Is it overspending? Is one person a spender and another person a saver? Is there a problem with compulsive or impulsive shopping? Is there simply no plan? Listen to each family member. Ask questions to clarify. Understand each person's values and attitudes toward money. Don't blame. Use I feel rather than you don't. Be ready to compromise and negotiate. Even consider a written contract to avoid misunderstanding. Third step in developing an effective spending plan is to balance your income, what comes in, with your expenses, what goes out. These should be equal. Ask yourself, how does your cash flow? Your goal is to match income with expenses. If your income is more than your expenses, save more. If your expenses are more than your income, then you need to make changes by either reducing expenses or increasing income. Once you start tracking where your money goes, you'll get a sense of whether you're on track and spending less than you earn. Matching income with expenses is the step that many people don't make time for, but it's important to do if you wish to make the most of your resources and achieve your goals. Based on this analysis, make adjustments as necessary to your spending and saving habits. Remember, savings is an expense category. As you get expenses under control and as income increases, put more money into some form of savings account. An important financial tool is the cash flow statement. It tells you where your money went last year. It forces you to look at the money coming in and the money going out, and the two columns must equal. It is important to match income with expenses. An ideal time period for a cash flow worksheet is from January 1st to December 31st. Now let's look at an example. This slide shows an example of a cash flow statement. By tracking where your money goes and comparing income with expenses, you can identify spending problems and make adjustments, either increases to income or reduce expenses. Please note that savings is considered a regular expense here. Why is that? So you get into the habit of paying yourself first, rather than just saving what's left after you pay all your bills. If you make saving a habit, whether it's $50 a month or $5 a month as an expense, you're more likely to build an emergency fund you can use for when the refrigerator dies or the car needs major repairs. Get into the habit of regularly saving part of each paycheck and pay yourself first. Note, there are many other expenses that you can include on the cash flow statement. The more detailed, the better. This is only a sample to get you started. Also, keep in mind if you don't keep good records, you may have to estimate how much you spend in each category. Estimate expenses on the high side and income on the low side until you set up a tracking system that gives you a more accurate picture. Now, please pause the video and go down to the final activity, which is the cash flow statement, and complete that. It can be either now or even later when you finish this budgeting video. Step 4 is to review and communicate your spending plan. Remember that we've already talked about tracking methods such as online banking, mobile app, receipt method, envelope method, and of course is the Money Desktop budgeting tool that the credit union offers. Some examples that you might identify after analyzing your spending leaks could be you might have to reduce some expenses or increase income, which could be eating less out, maybe drinking fewer lattes, getting a part-time job, brown bagging your lunch, holding a garage sale, shopping at used clothing stores. Lots of different ways to save or earn money. As you review your spending plan, remember that there are many different situations, things that we can plan for and things we cannot, that have the potential to affect your budget. Let's brainstorm some of the most costly situations that can throw a wrench in our plan. Some of those things might be medical emergencies, holidays, vacations, repair bills, auto accidents, or a lack of an emergency fund. On a smaller scale, here are day-to-day pitfalls that could drain your budget as well, such as eating out frequently, water left running, leaky faucets, leftover food, lights left on, late fees, unread subscriptions, things of that nature. Here are some practical money savings tips. Pay off debt with the highest interest rate first while making minimum payments on all others. Consider consolidating your debts. Only include debts with interest rates higher than the consolidation loan interest rate in your consolidation. Ask your credit union to run the numbers to determine whether refinancing a mortgage or even an auto loan makes sense for you. Bundle your insurance coverage with one company to take advantage of discounts. Call 3 insurance companies for quotes. Make sure you compare apples with apples when comparing coverage. Shop for a credit card like you shop for anything else. Consider the annual fee, interest rate, grace period, cost of late fees and over the limit fees, and penalties such as whether the interest rate increases if you pay a bill late. Use credit wisely. Only charge what you can afford to pay in full. Eliminate late payment fees and pay all bills on time. Understand the terms and conditions of each card. This slide lists even more money-saving tips. Use direct deposit and automatic transfers. Make savings a habit. Use rebates and coupons. Adjust the thermostat. Drive sensibly. Don't go grocery shopping when hungry. Make brown bag lunches. And if you use direct deposit and automatic transfers or holiday club accounts or automatic withdrawals, if you get a raise, save the difference for a year. Or when you get a raise, automatically contribute that amount to a retirement savings plan, such as an IRA or 401k plan. One way to save money is to use the step-down principle. If you follow the step-down principle, you reduce spending in gradual stages, rather than eliminating spending on an item completely. You can use this principle for many different kinds of household budget categories. For example, if you want to purchase clothing, think of the top rung of stairs as a high-end department store. The next step down may be a discount store. The next step down after that is a factory outlet, then a consignment store, and the bottom rung may be a thrift store, flea market, or garage sales. The more steps down, the greater the savings. Another use of the step-down principle is for frequency or amount of a purchase. For example, you may decide to dine out 5 times a month instead of 10, or you may step down by eliminating an appetizer, drink, or dessert when you eat out. These principles allow you to explore alternative ways to get more from the reduced amount of money you plan to spend. Here are a list of resources for saving money. The AmericaSaves.org, Consumer Federation of America, U.S. Department of Energy, and of course, Alaska Air Group Credit Union. The fifth and final step in developing an effective spending plan is to commit to manage your system for the long term. The key to any successful spending plan is to get into the habit of managing a system that works for you. Please take advantage of the online tools such as Money Desktop to allow you to track and budget and manage your personal finances. As you can see, you need to start with the end in mind. Always keep your goals front and center as you develop your roadmap for spending. Alaska Air Group Credit Union also offers a financial literacy tool with Bonsai. This tool is used in over 20,000 schools and many teachers use it. It has a Bonsai Junior program, a Bonsai Teen, as well as Bonsai Plus for adults. It offers interactive articles and financial calculators. Now is the time to develop your personal action plan if you haven't already. Make sure that you have that plan built to where you can find your spending leaks, set SMART goals by making them specific, measurable, adjustable, realistic, and time-oriented. Try several different tracking methods and then use the one that works best for you. Use spending apps and cash flow statement to help you reach your goals, and give yourself an annual checkup and make adjustments as necessary. And remember, your credit union can help you with all your financial challenges. So please feel free to reach out to us for any questions you may have. And thank you so much for attending this budgeting seminar, and you're one step closer to achieving your financial goals.